Morning, everybody. As mentioned, my name is Andy Haigh. I look after banking and capital markets for DXC across the EMEA. Joined on stage by a friend and colleague, Khal, who drives our advisory and research. We've got two parts to today. We're on the shift that takes you to lunch. So we're going to hit you with a lot of data, given it's around data. And cover two parts. One is around the trends that we see across industry. And as we're here for banking, we're then going to dive back and peel the onion around what does data mean and what does transition mean across the whole of banking, both the evolutionary part and the essential part that's needed to unlock and sit behind some of the roadmaps you heard this morning. So, Khal, would you like to kick us off?
Thank you so much. So I have the privilege of working with many large global organizations right across the world. And we tend to do with the leading edge, which is the part of DXC that I'm in, working on business strategy, technology strategy, sourcing strategy, change management, governance, etc. But I'm going to take a detour for a second before I get into the material, and which is, when we do this work, one of the models we use is a model developed by Simon Wardley, Wardley Mapping. Now, whether you like Simon or not, he's gifted his methodology to the world. Amazon, Netflix, large banks all are using Wardley Mapping somewhere in their organization. But there's four aspects of the Wardley map that I want to mention. Simon's methodology takes a value chain with user need at the very top. So it's all about customer need, user need. Second piece is visibility. Visibility to the customer. Lower visibility doesn't mean lower value at the bottom to the customer. The visibility's axis is important. I'll come on to that more in a moment. Now, the magic, I think, and I'm not here to teach you Wardley Mapping, but the magic, I think, of Simon's methodology is the axis of evolution. Everything evolves over time. Today's genesis is tomorrow's custom, which will one day become a product, and hopefully it'll become a commodity. Things accelerate towards evolution, things resist evolution. And finally, when we do the work, and I was actually with a big UK bank earlier this week, and I always say this is, when you create a map, the best thing about a map is you can argue about the map rather than each other. You've been in situations where technology, line of business, you're all at war with one another, you're disagreeing, and it gets a bit personal. But what we tend to find is that having a map makes it really, really easy to argue, and you can argue about the map rather than with each other, get the conversation moving on. So it was not about mapping, but this is the methodology we've used. So as a team, we've been out and looked at various industries over the last 4 or 5 years, and it struck me, working with one major financial organization out in the Middle East, that there's a set of patterns that we've been seeing. I want to call them out. So whether we are in energy, in telecommunications, in retail bank, investment banking, in insurance, the patterns are there. There's a zone of efficiency. In that bottom right area, it's all about efficiency. In the top space around customer, it's all about digital customer experience. Yeah. Now, and then the third piece that emerges is the development of new products, new functions, new features. There's 3 different zones on the map, and they systematically come up time and time again. And we've seen this across all the industries, and these are just 6 examples that we've put up today. But when I've been out and tested this out with clients in large-scale global organizations, they've said, but actually, Khal, when we are a size and scale of the kind of organization we are, the reality is we've got business projects happening in all 3. We've got IT projects happening in all 3. And the reality is all of them need to be coordinated and systematically managed. Hence the role of a governance type function helping to coordinate and manage all 3. Now, the argument I'm making is, and systematically, this is the advice we're giving to customers, is you've got to be ruthless in the red. Your core data and the data that serves up your customer experience piece sits in the red. But you have to be ruthless. You absolutely have to be ruthless. And that's the word I use. You might think you're really good and you've got your efficiency, but you probably can go several steps further. So ruthlessness in the efficiency zone. Get that data set as clean as possible because you're serving it up. Application modernization, resolving your tech debt, that sits in that red zone is absolutely critical. Moving into the blue zone is all about experimentation. The whole piece around customer experience is still really experimentation. You're augmenting that core data set with other data sets. You need a variety of data in that blue zone. You're experimenting. You want to see what patterns take. And when you see those patterns that are taking, you want to bundle those up into new products, functions, and features. And then you've got to scale those up. Now that data is coming at you faster and faster and faster. And you've got to handle the velocity of that data. But most importantly, you've got to make decisions off that data. And once you've got size and scale happening in the green zone, you better move it back into the red and make it really efficient. And that's an ongoing piece. So I personally, I'm not a big fan of the word transformation. And I'm going to steal one of Simon's terminologies, which is prepare for constant evolution. This is an ongoing game. And all of this cycle of activity is underpinned by data. It's underpinned by data. And if you look at explicitly at a retail bank, you know, that play is explicitly there. I've purposely left off the green bit. The emergent area in retail banking, we argue, comes from embedded finance, link it into the green of the other industries, like retail, for example, like the automotive industry, like the insurance industry. That embedded piece becomes more and more important, needs to be governed. And the final piece in investment banking, the same pattern we found as we've gone through. Have you noticed the zones are different shapes, different colors? They all need to manage. Well, we looked at the way we treat data and the way DXE also manages its data. We found the same pattern. Yeah. There is a whole area of efficiency. There's a whole area of experimentation. There's a whole area of sizing up and scaling up. So the key message takeaway that we have is there's 3 zones. Now, this model has been around for 30 odd years. It was a model by Tracy and Weismer. It's a model I've used extensively during my advisory days when I was in Gartner before I came across to Leading Edge and DXE. But Tracy and Weismer said you had to be good in 3 spaces and only excellent in one of them: customer intimacy, product, and operational. And I argue that the world has moved on. Over the last 30 years, the world has moved on. You have to play in all 3. And the final message is, and I'm going to kind of link and then hand back over to Andy, is in order to get good at this game, you've got to deal not just with your data, with your platforms, but also your underlying tech debt. In the customer space, it's all about discovery. And we wrote a research paper around data called Data Metabolism, which I published about 18 months ago. Discovery is all about hyper-personalization, requiring a variety of data. The developed state, the green state, that scale-up state, is all about getting reducing time to market. And that's about being able to act at speed on the decisions that you've got to make with the data that's coming at you faster and faster. And the final piece is in defend, which is that operational space. You've made the investments, you've got to manage the landscape, you've got to protect what you have. You need a volume of data, narrow and deep, and keep it clean. And there's a whole raft of stuff that we say that has to happen, but in the governance space, we get really good at the leading of change, but how to play those 3 worlds together. Over to you, Andy.
Thank you, Khal. So if we then just go completely pivot into banking, retail, corporate, wealth, capital markets, what does this really mean? What is that transformation? How does data interweave in it? What are the different challenges that sit within the foundations of moving forward to the shiny stuff that we all get attracted to around the evolutionary of where the bank of the future is going? So in summary, it all starts with the ability to transact. Nothing new. Banks do it today. If they didn't do it, they wouldn't be a bank. Actually, the data that's sitting behind the transactions, as we talk about, is getting bigger. It's all around actually managing that data in a smart way through best of breed housekeeping, archiving, performance, BAU type activities. But it's also about getting the applications ready So modernizing the core banking platforms could be a Murex, Calypso, Orchestrate, Finastra, Terminos, Avaloq, whatever. Optimizing that core banking platform, rationalizing across desk where possible, the old saying around adopt rather than adapt, so that that foundation of core banking is ready and tuned for the next evolutionary part, which we talk about. It's also about modernizing the payments and the bits that plug into it, the enterprise data management, and actually moving towards one bank, one CRM platform, one monitoring solution, one F&A platform. So again, simplifying and optimizing to Khal's earlier efficiency piece. Being sharp on digital identity, moving those platforms into the cloud. We talked about cloud this morning. It's about actually doing cloud right, rather than necessarily cloud first, but it's also optimizing and recognizing the assets within there that are not going to the cloud, so you can sweat them out appropriately as part of that journey, so you're not conquering everything at once. In there is layering the monitoring you need, looking at the stuff that's not going in the cloud, going back into the infrastructure level, moving from high cost, high power to low cost, low power, and maybe even sweating that mainframe and building the building blocks that allow you to measure carbon footprint and your path to ESG. Alongside the ability to transact is the ability to manage risk. Again, everybody manages risk today, market risk, credit risk, consumer risk. These engines, if you like, exist. But it's about moving those engines into the ability to do risk on demand, immediate risk processing. So that whole element there is a cloud, is an SI integration challenge to move to burst processing, move away from the big batch processes that exist in the capital market space to immediate risk on consumer, so you can put that money into that person's bank account very quickly. It's not just about the risk engines itself, it's technical resilience, it's operational risk resiliency, so that you can focus more on the evolutionary part of the journey rather than get bogged down in hotspots within our current ecosystem. And obviously, certainly forefront of cyber week this week, but sharpening the sword and constantly sharpening the sword in an arms race around data risk, cyber risk, and privacy. Alongside the ability to manage risk is the ability to conform. So I know we have a regulator body in the room as well. It's conforming internally, compliance, conforming externally, regulatory. So what? Financial services has been heavily regulated over the years compared to some other industries, but it's still a very, very big end-to-end challenge when regulatory activities get rolled out. It follows the transaction, and it goes back to the earlier point. The less you rationalize the core banking platforms, surroundings platforms, that regulatory chain has got to pass through different technologies, creating technical debt. As much as you try and move it into agile, it always comes down to a big waterfall test process. And ultimately, it frustrates the business because they're not able to focus technology on rolling out new business features. So again, the core banking focus, the one bank, all harmonizes that. And it's not just about regulatory, it's making sure the engines that are supporting, knowing the customer, anti-money laundering are sharp as possible. Reporting to the regulator, again, is not new news, right? So 95% compliant. It's actually now turning to tools like AI to understand what did that 5% do to your business and to your consumer, and unlocking those tools on the other side of that 95%. And then alongside the ability to conform is this engine room that is needed there constantly within the bank to kill and find inefficiencies in the BAU ecosystem, the landscape that's servicing the customer and the bank today. It could be anything from having single monitoring systems, so you can use infra to properly inform apps and apps to inform infra as you go through that journey. That's also needed to help kickstart the early phases of cloud adoption. But it's not just that, it's around chasing down inefficiencies in workflows, chasing down and improving STP, trying to kill paper out of the organization, looking at efficiencies in contact centers, and making sure that whole engine room is firing up because this is also making the evolutionary part of the journey have less debt, and it's also releasing funds that help act as a catalyst in achieving the evolutionary part of the transformation journey. So when we pull all these together, that needs to happen now and is happening now in all banks, in all different places. Tremendous amount of transformation that takes place, which is largely servicing BAU, the business today, rather than necessarily fully bracing the bank of the future. Now, in the middle of that is the ability to actually wear more change. So actually have an organization, a governance that's agile, that's able to take that layer and put more change through the organization. You know, Christian asked a couple of questions, how you get the organization behind some of these big programs. If you're not able to do that, you start to choke. It's also having a very focused part of the organization that can digest and understand new technologies, so you don't spend a lot of time and energy unnecessarily trying to work out if the new toy should be part of that ecosystem or not. So make sure you've got clean evaluation within the organizations to assess those tools. So without that ability, you won't be able to go, if you like, through the elevator to the evolutionary part of financial services. So what does that look like? And we've been kind of talking about it through some of the other guest speakers this morning. It is about having a centralized view of your consumer, the customer 360. So if you take it across the banks, asset management, wealth management, current accounts, debit accounts, credit accounts, unsecured lending, secured lending, motor finance, and insurance. Now, the bigger the organization, the longer it's been around, these are all separate departments, all separate systems, we know this story. The technology is there to bring those together. And as it kind of came from this morning as well, it's the ability to ingest the right information that's needed to drive business outcomes. It's an integration problem, and it's also working with the business and technology to understand what is the right information for you to be able to consume it, absorb it, and goes completely back to the data metabolism. You need to be able to move from, have I got the right information and can I trust it, over the mountain to actually, how can I now make money out of that data? And is that the right data? So it's a change. And then that starts to unlock on the basis that you've obviously got that castled from a security, because we know full well if that data gets compromised, is a very different ladder to try and come back from a credibility into the market, but making sure it's also conforming with regulatory initiatives and compliance. But it unlocks a daisy chain of benefits that everybody is looking for in the room: hyper-personalization, cleaner comms with the user or the customer, loyalty, and other things tag off of it. That then unlocks the bit to make money out of it. Cross-sale, being able to cross-sell products to your consumer, so you're covering as many products across that end-to-end consumer as possible within the bank. It's the technology, again, is there. AI, ML, machine learning, but the business needs to understand the direction it needs to go in, and it needs to club together and squad together with technology, so technology knows what to do with that technology, guided by the business in a very different way. That is a very different squadding, if you like, between business and technology. In the way that DevSecOps was formulated years ago, there's a new chapter of that that's needed now to formulate really the ability to identify and formulate those products. However, if we go back to the previous set, if you haven't modernized your core banking platform, it's going to choke you a little bit to onboard those products into it. If you haven't modernized your engine room in terms of risk, you're not going to be able to put that product out to market or pay or put that money into that consumer's bank account within an hour, or move forward and quest towards being able to get mortgages done within a short period of time. So that is predicated on the right systems in the back end, modernizing to take those products that are clean enough that you trust the data, so when you centralize it, you can do some stuff about it. It isn't all about cross-sale. It is also about the consumer experience, the simplified consumer experience, bringing this all together. So, for example, being actually giving the consumer as well the same amount of analytics that you have inside the bank to work out the products that you're forming against it. Letting the consumer understand exactly what's coming out of their accounts rather than the month's prior credit card to the actual credit card is a really simple view. But being able to then flick left and right to leverage their disposable income month by month, day by day. It's also, in that vein, giving the consumer the best chance to self-serve. So then maybe they don't go to the dentist as much as they do to the bank. So the earlier meeting. In there as well is what do the banks do with analytical bias that comes out of now we have the AI running on the centralized view of the consumer, which is now an even bigger eye of allowing us to work out what products to put to that consumer. A very good example, we're working with one big bank in the UK. They can see who has got a gambling problem before potentially the consumer themselves have got a gambling problem. It creates a conundrum. What do I do? Because if I go and mitigate that early, it's cheaper for the bank to go and handle that. If I go and touch Khal on the shoulder and go, we think you've been using Betfair too frequently, Khal, Khal's not going to like it, it's going to cause an intimacy problem, right? So actually, and we've also seen publicly on political grounds, what also happens if we make the wrong decisions as a bank and we offboard high profile people, it takes a CEO out. I hope NatWest isn't in the room. So with the eye that's now building, it's now creating different dilemmas that we need to uncover technically and work closer with the business to understand what we do. Now, if this gets right, it's an arms race. It moves towards the ultimate goal of zero onboarding. I want a credit card, I just want to use it today, I onboard it, bang, I use it, I throw it away. It will start to come with very tactical use of products. Banks want to cross-sell. They want to get the products out really quickly, where they want to make sure that product is right for Khal at his age, with his family situation, living in Dubai, with what's happening economically, with the holiday that he's got coming up. It's hyper-personalization. But then off the back of real-time onboarding, Khal can become really tactical in the products he uses. Use them, throw them away, use them, throw away. So actually the banks have got to try and encroach that space to make sure the loyalty doesn't go to the tactical use of products in a marketplace and they keep connection, which is also is the balancing act between making sure the right technologies are using areas like contact centers where actually the human touch is relevant, specifically around vulnerable customers and making sure that the vulnerable customers are identified early in that process. There's human contact in there. There's affirmation coming out of the digital channels to those people that just need to know, am I doing the right thing or not? And then the last kind of piece of the pie is cross-industry and inter-industry. When we talk about cyber, we talk about security, we all know that there's greater connectivity that needs to happen bank to bank around suspected fraudulent activity. You know, there's very limited things that stop. I'm going to pick on Khal again because he's built up loads of debt through Betfair, being a problem and walking from one bank to another. And actually the bank that used to look after Khal could see his network was dangerous as well. The bank that he's being onboarded to now doesn't see that. So again, there's regulatory constraints in there, but it's an interbank challenge around cyber and fraudulent activity. But then equally, it's cross-industry, which is why we also look cross-industry. We're talking about retail very early on today. Take automotive. My phone is a wallet and as a transactional base. I use my phone more than my wallet. I even just don't carry my wallet anymore. Everything is transferring to the phone. So what? Everyone's used to that. The car, if I wrote the right waivers, I could drive my car from my phone. My car is a digital wallet. My car now pays. My car is an emitter of transactions. It will become a digital wallet and a transaction base in the same way the digital asset of my phone is. And actually looking around how that interlocks with the use of the car and vehicles around it. If you go insurance business, you know, why am I paying the same premium when my car's on the drive for 20 hours a day compared to someone that's driving it 20 hours a day? linking that to the automotive business, allows the insurance to dynamically change their provisions so they can invest, which goes back to financial services. If you go into the utilities, actually the data now that's starting to come out, the backbone and half-hourly settlement in the UK, and looking at what utility bills the people are using and understanding where, again, they could be a vulnerable customer or what the right products to put into it, build the better picture of the centralization view of the customer that allows you to understand their vulnerable status, their net wealth, their disposable income, and actually the true eye that the banks can use to build the central view of the customer isn't just the data that the banks hold on their customers, it's the data that the customers use day to day, and that will be the next elevation of it. So the key message is there are two layers in the way that we see it. There is the essential evolution across the banking ecosystem, as we mentioned, modernizing the core platforms, optimizing it, adapting, going cloud where it's relevant, sweating assets where it's not. It's all a balancing act, optimizing risk engines, seeking, using tools, using AI, using enterprise monitoring to try and kill and chase inefficiencies, which then release some of the debt that allow you then to go into the next chapter that we're all been talking about this morning, is how do we monetize cross-sale and at the same time keep the customers first quenched in their customer experience. So that's kind of our end-to-end in terms of our solutions. So all of these purple sprouts that are coming off of these challenges are things that we do today for banks and outside the industry to help kind of peel back those challenges. If you do have any questions, my team is here, they're in the room, we've got a stand outside. Please come and talk to us about any of these. We'll be happy to discuss what we're doing with real world customers to kind of help peel this back. And to Khal's point, you have to attack each element of those parts of transition to properly evolve. Otherwise, it will cause friction and slow you down in the ability to kind of chase after that right-hand side from a evolutionary standpoint. And that's us.
Cool.